Good morning, everyone. Welcome to our Tuesday morning trading session. Can I just get a sound check? I've been having a little bit of technical difficulty this morning. I want to make sure you can hear me. All right, looks like I'm coming through. Great. All right, let's get the screen share going on. A brisk start to the day, at least here on the NASDAQ. Price has kind of fallen out of bed here to start. You can see a rather dramatic move lower. Let's take a look here at the Raptor. I know there's a lot of Raptor owners in the room here this morning. So the market opens right here, actually produces a hard edge bounce. I'm not quite sure why we didn't get a number 3 signal coinciding with that. I'm thinking maybe the cloud was crossed a little bit too much, but even so, that is a hard edge bounce. And we've got a very nice move to the downside, very strong move to start. We'll see how that plays out. We've also produced a number 1 signal. This is our cloud crossover. Oh yes, that's why. That's why we didn't get a number 3 here, because the clouds were crossing. They're now back in sync. And so the programming is saying, hey, you know what? We've got a cloud crossover signal. I don't mind the pullback first before committing to the signal. So we'll just give that a moment. It's still very, very early. We're only 2 or 3 minutes into the session. Aye, here they come again. Whoa, didn't even get a chance to throw an order in there. The fur is flying. Crazy morning here. Looks like our first in-sync eagle signal also paying off. I do believe that signal right there has found its profit objective. Oh, easily, quite easily. So the day's starting with a very bearish flavor to it. We'll see how that continues. You can see here already on the Falcon, we're starting to change over a little bit. We're getting a green trend line. With the Falcon, we take our cue from that trend line. The Hawk also trying to get more bullish here, working on a possible first micro-macro cross. The macro line just came into sync, so it's a very, very early first micro-macro cross. And here on the Raptor, we may get a counter trend signal. That's the number 2, the soft edge buy. Are we 5 minutes into the day yet? Oh, yes, we are. Okay, so the soft edge buy, the number 2 counter trend signal. There's always 2 things you need in order to have a counter trend signal. First, you have to have a trend, or at least something resembling a trend. Then you need what we call a test of the extreme. Now, normally a test of the extreme, in this case, the extreme is the low, comes up a little bit short. In this case, it actually broke by a couple of ticks, and now it's looking like it's trying to reverse the other way. And I think they slipped me a couple ticks too, which is a little odd, but we'll see if I can't get those back. What you're looking for is you're looking for evidence that the downtrend cannot continue. Okay, they're just about to hit the break even. It's early, so if you were inclined to try to run a trade out, this is probably a good trade to try. But we'll see if I can't get my profit target. Oh, don't you dare. Oh, you guys. Oh, that's not nice. All right, scoundrels. Just making a note here in my trading journal. It was that slip that the trade gave me out of on the entry side. Otherwise, I would have hit my profit target. See my intended entry. I would have found the profit objective. But didn't work out that way. All right, so here we go with yet another hard edge bounce. What I'm going to do is I'm going to look at a second push entry on this one. Now this is a similar kind of situation as what we just saw up here out of the open, right? The cloud is folding over a little bit, but it is still a hard edge bounce, and you'll notice that the Raptor system didn't produce a signal to match that. But this is why it's important that you still have a feel for the signals so that you can identify them on your own. Yeah, I was afraid of that. I was afraid my stop was going to be too tight on that. Because this market's going to need a little bit of room to recover from that bigger move. Ideally, I should have placed my stop here above the high of the morning. I probably could have rode that one out. All right, well, just dug myself a little bit of a hole that I'm going to have to try to get out of. Okay, I'll give them a little bit more time here to sort themselves out. I thought might have got lucky on a quick move to the short side, but it didn't work out that way. So here on the Eagle, the clouds are starting to cross. We do have another first micro macro cross here in the Hawk. The Falcon also working on a possible trend change signal. And of course, the Raptor. Clouds are crossing. This is trying to be a cloud crossover signal, ideally with the #1 cloud crossover signal. What we want to see is we want to see the clouds cross. And then we want to see a little bit of a pullback. And then we want to see the signal print. Okay, so the clouds are crossing. The hard edge hasn't crossed yet, as you've noticed. So the signal itself might be a little slower printing, but this is definitely a cloud crossover. Oh, look at that. Vic is asking, Eric, will there eventually be a printed manual for the Raptor 2.0 like there are for the other birds? Yes. I'm sorry I don't have an ETA on it. But yes. Well, this is turning out to be an odd little morning. So there's the cloud crossover signal. You can see, unfortunately, everything just developed way too fast there, but we do have a chance at a second push on the entry. And the second push simply means we allow the signal to print and then react and then buy in on some renewed momentum. If you're braver than I am, you can always throw in a limit order at the hash mark and try to catch the order at the hash mark. Oh, see, and now we've got a test of the extreme again, and price is trying to come back down. Well, I was complaining the other day about a lack of volatility. Careful what you wish for, Eric. Thanks, Steve. Steve says we've got consumer confidence report at the top of the hour. That's not a real deal breaker, that one, but we'll see whether it sparks the market a bit. Just going back to Vic's question about the manual and supplemental materials, Adam is the fellow who would have the timeline on those kinds of things. If you want to shoot him an email, he might be able to clarify things for you. But since he's probably just going to write me and say, hey, Eric, when's it ready? I can tell you it ain't done yet, unfortunately. All right, so we've got another cloud crossover signal. We've got a couple now. We're looking at reactions. Doggone it, if they don't stop slipping me. Slip me 2 ticks again. All right, you know what? I'm going to delete my profit objective, and we're going to try to run this one out. They're thinking about it. Got a little bit of an undecided bar forming right now there. You can tell by the width of the bar, the amount of trading that was going on there. So this 57, we're going to call it 57.50. Obviously, a very sensitive price level, and you can see there's also one of our support and resistance lines here, but the cloud also getting twisted up like a rope. I just hope my stop is far enough away this time so I don't get tagged prematurely. Peter says the cloud's too twisty for me. Time for a cup of joe. Grab me one too, would you, Peter? You saw the prompt form there that it was signaling a hard edge buy. Didn't complete, which is why it did not print the number 3 signal, but what a period of congestion here. It would be tempting I suppose you could just do an OCO order on it. Very tight little range here. Buy a break above, sell a break below. Come on, get up there. Seller's laying it on thick. Normally, when we see a little bit of a rally like this, there's going to be a little bit more follow through, at least an attempt to establish an uptrend. But right now, the seller's really trying to knock them down. Here we go, continuing with that sideways pattern. Well, what can we say? We're just kind of on hold. It looks like they're going to test the bottom end of the trading range. We'll see whether the breakout holds. Peter says, how do you like your coffee? Just a little bit of milk or cream, Peter. No sugar. Uh, they are going to try to run my stop again, you stinkers. Let's see, can I pull it a little more? Oh, I can probably pull it back a couple of ticks still. And still be within inside my risk parameters. Let's take that back a little. So I can cover below this swing here. That makes me a little bit more comfortable. Obviously we're producing a cloud crossover to the short side now. The other Peter says, good morning, Eric. Made $1,200 yesterday on 3 trades and went into sim mode, took a position, and went and played golf. Came back and the sim account was up $550, but rather than get sad that I missed a good trade, I was happy that I'm sticking to my 3 trades a day. Well, I tell you what, Peter, $1,200 on 3 days, 3 trades, that's fantastic. Like, hats off to you, man. That's excellent trading. The first Peter asks, Eric, if you weren't moderating a trading room, would you sit this out for a while? Yes. Yes, I would. Unfortunately, you know, being a trading room moderator, there's always a little bit of a fine line between doing something and just waiting for the markets. I know everybody always says, you know, just hold out for the good trades. And I do my best, but even so, you know, things can get a little boring, and sometimes I'll try to show something just so we have something to look at. I tend not to be a very active trader. I know there's some trading rooms out there where, you know, it's really exciting. People are always hopping in and out of trades and stuff, and that's not me. I'm kind of a boring trader. And if my wife heard that, she would have some wise remark to go along with that, but we'll leave it alone for now. Yeah, Tony says we've got enough barbed wire here to fence around Moose Jaw. The barbed wire comment comes from, if you haven't heard that term before, when the market goes sideways like this and prices are swinging on both sides of the price, traders give that a nickname. They call it barbed wire for obvious reasons. And just like regular barbed wire, playing with it is a good way to get hurt. Vic asks, does the cloud cross initiate a hard edge cross? Well, the cloud cross comes first. The number one signal, the cloud crossover signal, is, you can think of it as the trend change signal. The number two signal, the soft edge buy or sell, is the counter trend signal. And the number three signal is the hard edge buy or sell. And that is a continuation signal. In hindsight, we probably should have made the continuation signal the number 2 signal and then the reversal signal the number 3, but whatever. This is the way it came out. When the market is all twisted like this and you're producing signals and you're not getting any follow through, this is the time that you kind of need to take your context into account. Context, of course, everything on the left side of the chart. As this gets more stale, it will have less influence over what the market is likely to do next. But even so, you know, when you're getting a condition like this where the market is starting to twist up like a rope, you're not getting any follow through, you're printing a signal. Okay, you may choose to take the signal, but given the context, you don't want to go too crazy on the signal, do you? Sure, we're getting a cloud crossover signal. It's a high probability trade. You may choose to throw a couple dollars at it, see if it works out. You're going to need to run a wider stop. Maybe you're going to take profit on target. Certainly, even for larger account traders, you know, throw a onesie on it. Or if you can afford 2 contracts, put 2 contracts on it, take profit early, see if you can get a runner on the rest. But, you know, don't go in really heavy. And again, that's based on the context. All right, so we're right up here at the top end of the trading range again. Not quite to the high of the morning, which was 57.60. What was that big number from the other day? 57.80? Median line is 57.83. That would make for a nice little profit objective. Why don't I shoot for that? There we go. There's my trade. And I'll roll to break even at the high of the morning, and heaven help them if they tag me at break even again. All right, so we just tagged the break even. I guess I can enable my stops now. We'll hold it there for a moment. Okay, so we're seeing a little bit of a reaction here to the market encountering the high, and I got my fingers crossed that they're not going to tag me at break even. If I can ride out this swing, probably going to be in half decent shape, I think. Doggone it, they're going to come back now and tap me at break even. Come on. Well, That's annoying to say the least. I'll throw that back on the shelf for now. All right, so we're back in the back into the cloud, looking at perhaps a hard edge bounce. I honestly thought we were going to see a little bit more follow through on that, but didn't work out that way. So a very conflicted market. We're currently in swing mode, but only for a few more minutes. After that, we're moving into scalp mode. If you didn't know already, So we keep flip-flopping here. Whenever we're in the hard edge, we need to anticipate some sort of reaction. And that's what I'm looking for here. We did get a scalp opportunity. So here's an example people often ask, well, do you take trades that are counter to the eagle? Because of course the eagle is the trend trader. We think, hey, let's keep an eye on what's going on with the eagle. And there's nothing wrong with that. But because the scalper is its own independent tool, you can produce a scalp signal to the short side, even though the eagle is, the band on the eagle is still bullish. All right, so here come the buyers. Well, again, the Geiger counter pulling hard over to the buy side of the indicator. So I'm thinking we're going to see a little bit of follow through to the long side. Maybe. So here on the Eagle, what I would be looking for is a red bar buy to develop. The Falcon is going to need to produce a full trend change signal again, as will the Hawk, although if I get a green bar sell, I can look to buy that. And here on the Raptor, it's going to be a hard edge bounce. You can see this particular number 2 signal did get to the hard edge, but not much more. We'll see whether we can, if the system is going to produce a buy signal for us. It's a real chop fest, though, this morning. All right, so here's the Eagle signal. That has since printed. Oh, and we're getting a hard edge buy on the Raptor. So let me go see that one first. And I will just, Buy in, we'll throw the stops below the low. Ideally, we want to go 2 swings back, but I hit the buy button, so we'll go with that. I do believe this is the first signal this morning that I didn't get slipped on. We'll see if there's some buying support here along the trend line, but so far the market's showing very little love my way. Oh my gosh, there they go, break the trend line again. Okay, well here comes some buying. It's this churning sideways market that is just so brutal. Aspen, I think you've got the right idea. Aspen says the market's a little bit too choppy for me. Took 2 small losses. I'll revisit it later. And that's what you want to do too, right? You don't want to feel like you're tied to the market. This isn't a job, after all. This isn't like a situation where you show up, you do the work, you get paid. Here you can show up, do the work, and not only won't you get paid, but it may actually cost you to do all this. So, you know, don't get caught in that mindset that you have to do something. Your job description as a trader is to take what the market is giving. If the market's not in a giving mood, well, you're not going to be taking, as is evident this morning. Well, honestly, folks, I don't know if I'm going to put another trade on I tried 4 trades, got 2 break evens, got 2 stinkers. Well, we'll stay with the room, of course, but like I said, there's no love here today. Yeah, Tony says he's got stuck on the wrong side today too, even though he's been scalping, and it is no fun. It's a lot easier to trade when the market is following through. This is the kind of day where, you know, the big traders, the guys with the really deep pockets, and I'm not talking individual traders, although there may be one or two. We're talking guys like Bank of America, Goldman Sachs. They know where our stops are. They know full well. You think the market, you know, breaks the high of the morning. Where's the high of the morning? It breaks the high of the morning just by a couple of ticks without any follow through, and you know, gives us a second push right here. That's for our benefit to try to get everybody to hop on board. And likewise, here's the low. So don't be surprised if they tried the same antics down here, push the market a little bit. It'll look like it's going to do a little retrace. It looks like it's going to go, and then it's just going to move back into the trading range. This is why I say when the market seems to be going sideways, let it get outside of this trading range. Let it break out, prove to you that it can stay out, and then look to take the trade. You know, there's always going to be another opportunity, and you will always miss opportunities. Shoot, I miss a half a dozen trades a day easy. But until they get some reason to move, they're just going to keep chopping things about like this. Absolutely, Vic. Why don't we go over all the Raptor signals here? Vic's asking for some clarification on the number 1 signal, but we'll go over all of them. And when you see the signals printing like this, you know, every few bars, immediately you should be thinking sideways market. So let's move away from today, and we'll go into something a little bit more textbook. Okay, allow me to roll back just one more day here. We do have a couple number 1 signals, but I'm trying to find you the perfect number 1 signal, and there it is right there. So the cloud crossover signal, that is the number 1 signal. It will produce when the clouds cross over. So the clouds have gone from a bearish or uncommitted state to a bullish condition. that is when you're going to produce your cloud crossover signal. The number one signal tries to anticipate an emerging trend. The cloud crossover signal is usually preceded by a pullback before the signal prints. And normally there's some very good follow through from the signal because, like I said, it kind of develops at the beginning of a trend. Here we get a cloud crossover signal to the short side. So once again, we go from a bullish cloud. Now the clouds have crossed. Now we're bearish. Here's a little bit of a pullback. Sometimes this pullback is more substantial. But at any rate, all the programming parameters were met, and we came out with a cloud crossover to the short side here. We came out with a sell signal. All right, so that's the number one signal. It's going to develop when the clouds change direction. So the soft edges of the clouds are going to start to change direction. When the clouds are fully crossed, you're going to produce that number one signal. The number two signal is the counter trend signal. The soft edge buy or the soft edge sell, as the case may be. With the soft edge sell, as we have here, as I mentioned before, there's always two things you need to have in order to have a counter trend signal. First, let's bring that back. First, you need to have a trend, or at least something resembling a trend. Then you need to have a test of the extreme. In this case, the extreme is the high. And then we come back with the failure. So right here, it looks like the market's no longer able to maintain the uptrend. Here it starts to change direction, and then we produce the number two counter trend signal. Counter trend signals, by their very nature, are a lot riskier than with trend signals, right? So when I take a counter trend signal, it's almost always going to be with limited risk exposure. I'm going to be looking at maybe just taking a single contract, usually, or at the very least, dialing down the risk amount. The target, the objective for the soft edge buy or sell signal is the hard edge of the trading band. However, sometimes we can see it go much further. So there would be your first objective, and here you can see is an instance where it actually went a lot further. This is rare, by the way. You shouldn't be too concerned about missing out on a move like this, because what tends to happen is when the market encounters the hard edge, if it goes a little bit further, it will usually pull back somewhere in here and come out and produce a number one signal. That's what happens most of the time. When you have an established trend, this is when you want to be on the lookout for a number three signal. That would be our continuation signal. It is a hard edge bounce signal. Unfortunately, these pullbacks here, the market was moving really, really fast and never really got close enough to the hard edge to produce a signal. But let's see if I can't find you something, again, a little bit more textbook. Well, here's a nice number one signal as well. So the clouds cross. The pullback was programming probably saw this as the pullback right here, and then all the parameters came into sync right there. Oh, here we go. Here's a decent number three signal. So remember, the number three signal is a continuation signal. So obviously you have to have a trend to continue. You just can't continue if there's not a trend preceding it. So it has to resemble a trend, Right, so here's the cloud crossover signal right here. So it looks like we have a downtrend. Here we have the counter trend signal. The market makes it to the hard edge. That was the objective. Whether or not you'd want to take that trade, you know, there's enough there to scalp it out, but we'll leave that alone for now. And then we come back with a continuation signal. So we hit the hard edge, and now we've got the continuation signal, the number 3, the hard edge bounce. It doesn't matter so much whether it encounters the first hard edge or the second hard edge. The hard edges of the trading band are significant because, well, they kind of, they're a moving average line, but they're tweaked. They're actually an RMA, which is unique to indicator warehouse. But they tend to show you a sensitive price area. So that's why whenever the market encounters the hard edge, we always anticipate some sort of reaction. All right, so when the market reacts to the hard edge, it comes out, it produces a number 3 signal. That is our continuation signal. So here you can see we got a number 3 signal coupled with another number 3 signal. And then the market continued a little bit lower from there. When you get a pair of number 3 signals like this printing within the same pullback, this is kind of the pullback phase right here. This is actually the 4th Raptor signal, which unfortunately the parameters were such that we were unable to program it for it. But it's before the Raptor 2.0. We always used to call this a double pullback. So the pullback initiates, the market comes out, produces a signal to sell, pulls back one more time, comes back, produces another signal to sell. This is a very strong signal. That's what we call the double pullback signal. All right, so there's an overview of your 3 signals. I hope that makes sense. If not, please do not hesitate to ask. Fred's saying crude oil is trending up fairly well this morning. Let me pull a crude oil chart here. Oh, it is too. Look at that go. One thing about the number 3 signals as well is if the market comes within a couple of ticks of the hard edge and it reacts and it produces a signal, but you don't get the signal prompt, is that a number 3 signal? Yes, that is a hard edge bounce. If the market reacts up here, you know, we're still a fair distance away from the hard edge, I would not consider this a hard edge bounce. Neither would I consider this a hard edge bounce, even though it did have some very good follow through to it. However, if we get within a couple of ticks, it's not going to print because the programming, of course, computers being computers, demand that the price actually intersect the hard edge of the band. But visually, you can see that's a hard edge bounce. So this is why it's important that you're able to recognize these setups independent of the programming as well, because that should have, well, it is a hard edge bounce, even though it didn't prompt with a number 3 signal, and it did not prompt because prices were a couple of ticks short of the hard edge. Yeah, way to go, Fred. Good eye. Yeah, no problem, Vic. Vic says, I'm going to study them and I'll let you know if I have any issues. That's why I'm here, folks, really. At the end of the day, I'm here to help you learn how to use your software and hopefully I can show you a couple of good trades in the process. Today being the exception, although we've got a little bit of a rally going on now. Yeah, great story here from Tony. Tony says, years ago when the pits were active, I went to Chicago and got a floor pass from Lindlock. I was amazed to watch one set of traders run the stops and the other set of traders run the stops on the other side, back and forth to the first set. Happened over and over. Oh yeah, they do. They can't move the market. Well, okay, I'm not going to, let me put my aluminum hat back on and cover the windows with tinfoil. I'm not a conspiracy nut, but the fact is the markets exist for the purpose of trading. Duh, right? This statement's going to make a lot more sense if I use something other than a stock index, because a stock index is not really a physical type thing. But let's take soybeans, for instance. Do you think the soybean market exists for soybean traders? No. The soybean market exists for soybean farmers and for soybean processors. The coffee market might make more sense to most people too, because I'm sure most of us in the room here are coffee drinkers. So, you know, the coffee market does not exist for coffee speculators, coffee traders. It exists for coffee growers, Juan Valdez, and it exists for coffee producers like Starbucks and Tim Hortons, among others. We are the grease between the wheels, right? We try to capitalize on market imbalances. But the fact of the matter is, the market exists for the commercial players. The NASDAQ really is no different. The NASDAQ, even though it's a composite, which is why it makes less sense as an example versus soybeans or coffee, exists for the commercial players. They have ways of hedging positions, and we try to capitalize on smaller moves in the market. So I guess what I'm saying is the markets will always move in favor of the commercial interests. So if you're trading soybeans end of day, it behooves you to pay attention to the commitment of traders report. You want to know what the commercial traders are doing. You don't care so much what the small speculators are doing. You want to know what the big guys are doing. You want to know how the big funds are positioned. You want to know how the farmers, how the commercials are positioned. Because they will ultimately drive the market. Who knows the soybean market better than a soybean farmer? Nobody. Who knows the coffee market better than a coffee producer? Let me think about that. Nobody. It's no different with the NASDAQ. So when the market is bored or balanced, see, this is actually a very happy market. The market is very, very content to be trading between 57.40 and 57.60 or 70. It's very, very happy right here. But they're bored like everybody else, so they run the market down a little bit and they run the market up a little bit. They can force the market, 10 points they can sway it that much. They're not going to, move it 40 points, 50 points, unless there's actual participation by the big players. And this is true, again, like I say, if we think of a market like soybeans, um, the pikers, the small funds, the large independent traders might be able to sway the market a few cents one way or the other. But if soybeans moves 50 cents, it's moving because of the way that the commercial interests are aligned. I feel like I haven't made a very good explanation of that, but if you kind of keep in the back of your mind that the market, even though it looks like it moves randomly, does not move randomly, that's probably the lesson you want to take away from that. And our objective is to align ourselves with what the big fish are doing. Hey, Vic says, remind me to tell you the time I met Tim Horton. For those of you who don't know, Tim Horton was a hockey player, I guess back in the 50s, wasn't it, Vic? And retired from playing hockey and opened up a coffee and donut shop. Just like the Starbucks are ubiquitous in the United States, Tim Hortons can be found on almost every street corner in Canada, although Starbucks are on every other street corner in Canada now. Especially here on the West Coast, and I know in Ontario, my goodness, I don't think we could ever go more than a couple of blocks without running into a Tim Hortons. I don't know what they put in their coffee, but it's more addictive than crack. Very good coffee. All right. So what are we looking at now, class, for you Raptor traders? What am I anticipating? What signal do I think might print next? I believe it, Elmer. Elmer says, I was told the other day Starbucks opens a shop in China every day these days. Tony, I see your point. Tony says a number 3 signal. I'm actually anticipating a number 1 signal. Because the clouds, remember, a number 3 signal is a continuation. So we have to have a trend to continue. If you look at what came before, and I see why you're thinking number 3, because the clouds are more or less bullish. But we did have this dip here where the clouds are all out of sync. Now they are in sync. We're making a pullback. If we come out of this pullback, we should produce a number 1 signal. And don't be too disappointed, Tony. I know where you were coming from. We got a bit of a protracted macro pullback / 4 arrow consolidation here in the hawk as well. Peter asks, the actual NASDAQ index is a composite that moves with the underlying equities. Yes, that is true. So the NASDAQ, this is actually the NASDAQ 100, so tends to be tech stocks mostly. Peter asks, how does its movement relate to movements in the future, which I think represents the projected value of the actual index at contract expiry? Well, it doesn't, yeah, okay, I see what you're getting at. Most of the markets have a cash, what they call a cash index or a spot market. And the cash market will either be a little bit higher or sometimes it will be a little bit lower than the index market. Because this is the projected value of the NASDAQ come mid-September, it will vary slightly from the cash market. That's true. However, it's gotten to the point where it doesn't differ that much. Some people follow the spot market thinking that it acts like a bit of a magnet. So if they see the spot market trading above the futures, that this will have a tendency to pull prices higher. And it actually won't look like this. It will look more like this. The spot market does tend to react a little bit earlier. I don't know if it reacts fast enough that you can actually do anything about it. It follows the futures pretty darn close nowadays because everything's electronic. You had a little bit more of a crystal ball effect 20 years ago when this was information that wasn't available to everybody. But yes, Peter, you're correct. Right now, traders are saying, if nothing else happens, the fair value for the NASDAQ stocks come September is 57.60-ish. Oh, interesting little side story here from Vic while we wait for that number one signal to develop. Vic says that he met Tim Hortons in the 70s when he was playing for the New York Rangers. Says we were both in a local gas station having our autos repaired when I heard him say A. I asked him if he was Canadian, and told my wife he was. He was very nice. After he left, the owner of the service station asked me if I knew who he was. I said Tim Horton, but I had no idea what he did. The owner informed me. Yeah, he's kind of become a Canadian icon with his little coffee shop business. I was down in Vegas one year, and I was playing craps, and the dealer, after a few minutes, the dealer asked, so where in Canada are you from? And I said, how did you know I'm Canadian? He said, I just heard you say A. I said, oh, darn it, I was trying so hard. Don't say it a lot, but every once in a while it slips out. You just can't help it. I don't know, I've probably even done it in the room, unconsciously. Yeah, Peter says if Apple stocks jump up, then the index will move up and the future follows almost instantly. The nickname, if you don't know, for the NASDAQ is AppleDAX because well, I don't have Apple on my feed anymore. If I overlaid an Apple chart over the NASDAQ chart, you would be hard pressed to tell the difference. All right, boys and girls, it looks like it's going to be a bit of a dud for the rest of the session here, so we're going to pack up shop for now. We'll try it again tomorrow. Hopefully the market will be a little bit more cooperative through the remainder of the day, not just out of the gate. If you're going to hang with the market here, I'm thinking the buyers have a little bit of a upper hand at the moment, but it's still very tough slogging, very sideways type trading. You can see we are in swing mode and scalp mode coming up in 20 minutes, so it doesn't look like things are going to get much better. We'll talk to you tomorrow. Bye for now.